All right. Well, welcome everyone to our insurance webinar. Pleased to have Cole Adams, who is someone that many of you on this call work with each and every day in terms of handling insurance policies for our community associations. And this call really started on the idea of Cole bringing some thoughts or some items to my attention, our group's attention about post winter storm, what the state of insurance looks like, specifically in Texas and around the country, but specifically as it relates to community associations, our board members, our managers, the financial aspect of policies and what the impact on the damage stemming from that storm, what that's going to mean in terms of rising costs. A lot going on, and so wanted an opportunity to bring Cole on to offer some of his insight on what he sees, and also have an opportunity to answer some of your questions related to insurance policies for your communities. As we do with our webinars in all cases, I'll keep everyone muted. If you have any questions that we can feed over to Cole, go ahead and find the chat function in Zoom. You can type in your questions and I will do my best to get those over to Cole. And we will also send out Cole's contact information after the call so that you have the ability to connect with him if you want to take something offline and get deeper into a topic with him. So appreciate everyone's time today. Appreciate for those board members joining us on the call. Thank you for taking time out of your busy week to learn more about how about insurance and how it impacts your community associations. Cole, welcome.
Thanks, Mitch.
Thanks for joining us, brother. Can you mind providing everybody just a brief introduction on you, your agency, and a little bit about your background?
Certainly. So I work with a company called Community Policyholders, and we are a community association specific company. So that's all we do. And really, our job is to help get you guys insured, but also try to educate you along the process so that we make sure that there's less hiccups than normal as things go on. There are always going to be hiccups. It's insurance. We can't always cover all the bases. It's just the nature of it, but we try as hard as we can to be on top of most of everything that we can get our hands on, and then educate the board members and managers of what we look at and what we do. So hopefully they can also have an eye on what's going on. The purpose of this call today specifically had to do with the recent storm and what I'm seeing out there on the carrier end. And so a quick explanation of how insurance works. You'll hear a lot of terms. You'll hear agent, you'll hear carrier, you'll hear wholesaler, broker. The way that it works is similar to a mortgage. You reach out to a mortgage broker, and in that case, that would be similar to your insurance agent, and you say, hey, find me the best deal out there. And you provide them with all the information you have. They go to banks and they try to provide you the best mortgage. That's what we're doing. So as the agent, we don't control the insurance policy, but we look at the market and we find the best policies out there to offer up to you guys. So the good of that is we're able to work with multiple carriers. And so when one carrier goes away, we have access to other carriers. The downside of that is we don't control your policies. So that's one thing that through this claims process, and we've had more claims in the last month than I've seen in my entire career. So there's been a lot of them, and that's been one of the things that I wanted to express, is that your agent is not necessarily your insurance carrier. They're not the one that is actually providing the insurance. They're the ones finding the best insurance out there for y'all. That being said, we are an advocate for you guys. So when there is a claim, while we do not control the process, and in reality, the carrier wants to speak to the insured directly, whether that is the manager who's going to take on that role of being in contact with the claims adjuster, or if someone from the board decides to do it in lieu of, they speak to you all directly. And so we can help out only as much as we know. So if there are problems, get your agent involved and let us try to fight on your behalf. And that's what we will happily do. Now, we can't always change things, but we can, get a claims adjuster on the phone and say, hey, look, here's what we see in the policy. Where are you seeing what you're seeing to deny this claim? So get us involved. But again, we're not always in the know along the process, because they kind of like to keep us out of the loop, because they know that we are fighting on y'all's behalf. And then also with this latest claims incident of the storm, you have policies that are occurrence based, you have policies that are claims based. What that means is, when an occurrence hits, so the date of that storm, those 3 days, it's all one storm. When that hits, that is the date of that occurrence, and that is whoever was holding the policy on that date. That is who is going to cover that policy. If there's resulting damage from it down the line, they're still on the hook for that policy. Claims-based policies are whenever the claim is made, and those are your directors and officers. The property and general liability, those are always on occurrence-based forms. Your directors and officers is on a claims-based form. And so I'm not really going to get into directors and officers during this call. If there's any questions about that, hopefully as board members, you understand your directors and officers policy, because that's the most important thing for you guys as officers of the board. If you don't, I'm happy to go over it with any of y'all. You can send me an email. I'm happy to jump on a phone call, but that's something very important for a board member to understand is their directors and officers policy, because that's your protection for doing your thankless duty as a board member. But property and general liability, kind of the big ones here in Texas. General liability is not going to be affected all that much through this storm. It's going to stay decently consistent. The insurance market as a whole over the last couple of years, as I'm sure most of y'all have seen with your insurance premiums, has been hardening. What that means is the market is adjusting itself back up. It had been what we call a very soft market for a very long time. Rates just dropped. And while that was great for a time, what that did was, as soon as there was claims, carriers just start pulling out of the market left and right, because they weren't charging enough money to stay in business when there was a large claims event. And that gets us to the point that we are now, especially after this latest storm. We already had been seeing carriers pulling out of Texas, making it more difficult to find carriers to do specifically property with condominiums. But the HOA market in Texas is also, there's only a handful of carriers that even want to write HOAs. And I mean the single family home associations. So where we are now is we have, if you happen to live in a condo or manage a condo, if you are in the North Texas area, things are pretty rough right now. It's hard to find carriers to write things, especially if you're an older community, if it hasn't been updated. Things are becoming more and more difficult to find carriers that want to write it. And what that means is when you're down to 3 carriers and they know they're the only 3 carriers, rates go up. In Austin, we've been a little bit more stable. San Antonio also a little bit more stable. And then in Houston, Houston has also been fairly stable. There's been, storm events over there, hurricanes and things, but it acts a little bit differently on the coast. So I guess the point of what I'm trying to get across is that if you are expecting your insurance premiums to remain static, I would not expect that. I would expect an uptick. especially if you're in a condominium community where the association is responsible for insuring the buildings. Those property premiums, I'm seeing them already in Austin. I've seen some renewals go up by nearly double. Now, I'm not saying that's going to be the norm going through this, but I've seen that in Austin. Some are not as bad. A lot of it depends on the age of the building, the upkeep of the building, fire protection. Are there sprinklers? Things like that. The makeup of the building, is it frame? Is it steel? Is it concrete? And I know that generally they're going to be frame, and generally they're going to be non-sprinkler. In Dallas, we've already seen them trickle up a lot. I guess trickle, they went up by probably about 30-40% on the property side over the last couple of years. And they're at a spot to where Dallas may not continue to go up quite like Austin is, but we are also starting to see higher wind and hail deductibles. There's been talks about some sort of water freeze deductible, separating that out like your wind and hail, to where, instead of having a $5,000 deductible on your property, you will see the wind and hail, which is now 1% to 2%, depending on where you are, could go up to 3%. There could be another percentage deductible for a freeze event. We're unsure at this point, but what concerns me is reserves. So if you do not have reserves in your community, and I understand that it's not always the easiest thing to get reserves, but taking a look at your reserves and formulating a plan to make sure you have reserves in there could be very key for a lot of you. Because if there is an event where you are having to pay out 1% or 2% of your property values as a deductible, that can get pretty expensive. So looking at your reserves, I think, is key. Go over that with your manager, your board. Knowing your loss history, what we're seeing a lot of, we've been trying to move accounts to better carriers, not having an up-to-date loss history. And so as you move from agent to agent over the years, it does make it harder to get your loss history, because you're going to have to contact your current agent now. And what they want to see is, they want to see generally 3 to 5 years, 3 being the norm, 5, or for some of the carriers, you may have to call a couple of the older agents and ask for your updated loss history. But it's something that we all deal with in the industry. We're all prepared to provide you guys, and it's something for the most part we can do fairly quickly. So knowing your loss history for at least the last 3 years is key if you want to be able to move over to a better carrier.
Well, let's talk a little bit, just to clarify. So in terms of the impacts that you're seeing from these rising premiums. So one, we know, and it sounds like Austin seems to be seeing the biggest leaps in terms of increases, specifically around the property premium, which, to be clear, we got a question. Is that specific to condos or HOAs? Property is property, right? So it's that portion of your insurance policies that cover the physical assets that the association is responsible for maintaining. Is that right?
Correct. Property is property, but more on the condo side. The single family is more stable because they're not insuring as much. Mm-hmm. So the property for them, is going to be your wood fences, pools, things like that. Yeah. However, we have processed a ton of claims for single families, for the pools, for the pool equipment breaking, for the landscape. So I would not be surprised to see their rates go up as well. When it comes to, and I don't want to get too in the weeds on this, I don't want to confuse people, but you have 2 different types of insurance carriers. You have a standard carrier, which are carriers that are, we call them, they're authorized to do business within the state of Texas. That means that they participate in the Texas Guarantee Fund. So if they were to go insolvent, Meaning if they had large claims, could not pay, the Texas Guarantee Fund actually steps in and pays those claims. So you have some protections there with them. And to be a standard carrier, you actually have to file rates with the state of Texas. So you can't just immediately up your rates because they are filed. So you have to refile rates to get new rates. So, and that's most of your HOA standard or single family carriers are going to fall into that category. So we're probably not going to see huge rate increases right away, but I would not be surprised once they look back at this year and see the amount of losses they had to see on their property side. Rates, they refile rates and rates go up. So I would prepare like that's going to happen, at some point. It's just not going to happen immediately.
Now, Cole, these insurance carriers, rarely do we, board members really look at ratings of insurance carriers. Why is that important, and what's happening to these ratings given everything that's happened regarding all the damage that these carriers have been responsible for dealing with?
So carriers are rated on a couple different scales. There's AM Best, and then there's another one that's leaving my brain at the moment. But AM Best is the main one. What they do is they come in and they rate the carrier on basically, their ability to pay claims, their financial size and ability. What has happened recently, there is a carrier that was very popular with Texas condo properties because they were basically the last standard lines carrier that was writing business in the state of Texas for condo property. They had good rates. They were standard. They were in the Texas Guarantee Fund. They had an A rating. Because they're on so many, they recently in the last year have paid out on 5 hurricanes and now this latest freeze event in Texas. What happens is insurance carriers have reinsurers. They have back end money that handle the hundreds of millions of dollars. The insurance carriers is on it for like that first 5 million, right? So this particular carrier, AmCap, American Capital, they're good. They pay out claims. They're known for paying out claims. They're out of Florida. They're used to disasters. They deal with this. Someone you can feel good about, but they were recently downgraded because their capital went from 62 million to 22 million, like that. Now their reinsurer is still in play, which is the main money people, but they get rated on their face value capital. And so they got hit. They got moved down to a C rating. It's causing a lot of issues, obviously, with us right now trying to get these communities moved. And we get a lot of questions. Should we stay? Should we not stay? Where it really comes in with this particular company, and again, it's something that speak with your agent about, but this particular company, in my opinion, at the moment, I don't have a worry of them not paying. My worry is that there will be lenders who will say we're not going to lend because the association's carrier has a C rating. Not all of them will do it. We don't know. So that's the worry. So some were trying to get moved immediately just to prevent that from happening. Some of my associations are wanting to stay and see what happens until we have to move. This company already has plans in the works to backfill, to get their rating back up to an A rating. They're hoping within the next couple of weeks, but it could be a couple of weeks. It could be longer. We don't know. So that's where the ratings come in. The ratings come in because they are based on the ability to pay these claims, and also lenders look at those ratings, and so it can cause issues with your lenders.
Yeah, there was some question from one of the audience members about specifically who makes these ratings. So to be clear, these are companies that basically look at the financial aspect of a carrier and rates them based on their ability to cover losses, right? To understand how financially stable they are in the event of an event of a storm or some kind of catastrophic issue, being able to cover their losses in the event of a weather event or any other event.
Correct. Yeah. And the main company, again, it's the letter A period, the letter M period best. And so if anybody wants to take a look at the AM Best rating schedule, you can go to their website and you can find out more about AM Best. Yeah, it's a third party company that comes in and rates. They're just the most prominent.
Well, I want to, can you repeat the name of that company that there was a question, what is the lowest rating of an insurance company that we recommend? What does that look like? So as a board member, I get my, yeah. Okay. So like I get my, my proposed, renewal, and I'm looking at my carriers, and now I know about this AM Best thing. So I'm going to go in, go online, go to Google AM Best. I'm going to go type in the name of the insurance carrier, and I'm going to say, okay, what does that look like? And so, A, B, C, what does it all mean to me, and how, how realistic is it that if I see that there's a carrier rated low in that list of policies, do I pick up the phone and call Cole? How does that work?
I would say for the most part, you're not going to see someone present you with a carrier that is less than an A rating. It's kind of industry standard that we don't present carriers that have a B rating or lower, unless there's some circumstances that we can't get someone covered because of something with the association, and we have to go to a B rated carrier to get it. And that's very, you're going to be signing stuff to say, I know it's a B rated carrier. So AA is the standard, and it'd be surprising to see someone offer up less than an A unless there were some circumstances that you didn't already know about of why they're doing that.
I guess in some cases, somebody clarified that in some cases we may not have a choice depending on the loss runs and what the state or condition is. Sometimes you're scrambling just to find somebody who's willing to insure it. So in those cases, you would know, right?
Yeah. We're going to say, look, we can't find anyone that is, the roofs are 40 years old. There haven't been updates to the wiring. We come across, believe it or not, aluminum wiring more often than I would like. If you have aluminum wiring, there's very few people that are willing to take that risk because of the fire hazard there. So yeah, and that's where it comes in. So sometimes we just can't get someone done, and we have to go to either a B rated, or there's carriers that just don't participate in the rating scale. Or maybe they don't go with AM Best. Maybe they're with a company called Demotech that rates them. But there's definitely going to be conversations that will be had. There will be signatures that will be needed of acknowledgement. So it's not something that should ever be just slipped in. And I would be shocked if there was someone out there slipping in lower rated carriers.
Well, let's shift to, we know that premiums are on the rise. How much, we don't know. I think it's going to be case by case. I know we'll get the question inevitably, hey, can I budget 10%, 15%? What's the magic number there? And I would say that we don't know. I think budgeting anything from an increase standpoint is going to be a smart move. And if we're able to come down lower than what's budgeted, it is what it is. I know sometimes budgets are forecasts, and having a conversation with you specifically on, I think we have to look at that case by case in terms of the type of association, the type of policies that the association's carrying, et cetera. We know deductibles are increasing, and I want to talk a little bit about that. But I find, and we're already having conversations with boards in terms of just kind of looking back and saying, okay, well, lessons learned from this experience. We have associations who, I think a lot of them learned the hard way that they were working with agents that didn't write their policies appropriately or accordingly. Fortunately, it's why we work with you. You're an expert in this space, and it's all, it's everything that you do in terms of understanding what an HOA, a single family, subdivision, or a condominium, what goes into insuring these properties, what's on the back end of a claim, and how to manage that, and what are the different types of assets that go into that. But I want to kind of take a look back and say, hey, one thing that you'd mentioned earlier is deductibles are going to be a factor, and many associations had to learn the hard way that because they deferred on reserve contributions over the years, they had to scramble to pull money. I think one thing that might be something to start looking into is a line of credit with a bank. So in the event that you can't catch up on your contributions, a line of credit, something to cover that deductible, specifically in condominiums, probably something that's worth exploring, or some other type of short-term solution where if you need to draw from that money to cover the deductible and get, we saw vendors that weren't going to start remediation in some communities until they got a down payment, essentially, to secure their crews from working, and then wait for the insurance proceeds. So want to talk a little bit about kind of the look back, and what are some of the things that we need to consider heading into our next renewal, and how much do we involve our agent? What's the expectation around really making sure that we're not caught off guard in the event of another storm? Assume that this storm that we just experienced, although kind of one of those once in a generational type events, we don't know, it could happen again next year. So what are the things that we can do to start to prepare for that, and looking at our policies to make sure that we have the right types of coverage that we've got? When we look at our property policies that we've got, take an accurate inventory of the different assets that we're looking to insure. How do we go about that? Can you speak to that for a little bit?
Yeah, and we have recently had, over the last few years, we've had a lot of once in generational weather
Yeah,
events. So I'm starting to think that they're no longer once in a generation. So
no doubt.
so yeah, I definitely am not thinking that's the last freeze like that we're going to see. I think it's more of we're beginning to see weather events that we're not used to seeing that are going to become uh, less than the generational events. Yeah, so the few things, the main things are to know what you have, right? And it sounds simple, and but the reality is, myself as an agent, right? So when I am writing a policy, I look at your current policy, and from there I can look at what is on that policy. Now, generally, it's not broken out line item by line item. The carriers make us turn it in line item by line item, but on the policy, it's blanketed out. It's X amount of money for all your property, but it's generally not line itemed out. So we make up a statement of values that line items out every piece of property out there and a replacement cost value associated with it. Looking at that as a board and feeling confident that what is on your statement of values is correct is enormous, because that's another thing that we're finding out right now is that it's not correct. And the agent, I'm not going to know what's out there. The board members, especially if there's someone that's been on the board for a long time, those are the ones going to have the best idea of what's out there. But agent, we're not able to know what all y'all have. And so
And to be clear, Cole, we rely on the manager to do that. I don't expect our board members on the call to go through and know every single thing. I think it's certainly something worth looking at. It's an agenda item in a board meeting. For us to have a conversation around making sure everyone's aware, because more eyes than one set of eyes is always a good thing. But to your point, it's so important that we know that looking through those policies and understanding what's in there, and taking account of of those insurable items is incredibly important, right? We found some policies that for whatever reason somebody wrote something and forgot an asset, right? Forgot something that was one of those moments where you come out of that storm thinking, okay, we've got insurance, everything's gonna be fine, and then all of a sudden we learn the hard way that it wasn't, right?
Yeah, and that happens. Um, I wouldn't say a ton, but it happens. And but another thing that we see is properties added, and it's not relayed, to the agent at some point, and so it's just never been put on the policy, and that policy just keeps getting renewed with those same values. And there was a park that was put in, 7 years ago, and it's now switched management companies, a time or two. That board that was there is gone, and then everyone involved now has no idea that that park's not on the policy until there's something that happens to it. So understanding what's out there is enormous, and making sure that your agent has the up-to-date information to put on the policy is number one.
I think one of the things that we have to safeguard against, obviously board members, managers, we always want to be good stewards of the association's funds and make sure that we are, reducing expenses wherever we can. But I would say that one place where we don't necessarily want to go on the cheap is on the insurance side. And, oftentimes you find insurance policies are written in a way that give you options. All right. So, yeah, lower deductibles mean a higher premium. And so you have to look at, what you're going to sacrifice. Are you going to sacrifice the premium for less coverage in other areas? And I think one of the things that folks fall prey to sometimes is that a certain policy is put together 7 years ago, and we budget a certain number, and then there's this pressure to keep to that number. And with every renewal, we say, okay, as long as that policy is about the same as what we budgeted for the year, we're good, right? And so what happens is we fall prey to not reviewing this stuff every year, or engaging our agent on what's in the policy, what does this mean in the event of a catastrophic event, and do we have the funds to be able to cover those deductibles and be able to manage those issues in the future. If we are going to sacrifice one area and not cover it, then do we have the funds to be able to replace it should, God forbid, something happen? So playing those what if games is pretty important to making sure that there is a plan in the event that to really minimize the amount of surprises that we experience in post event where everything is stressful and there's just a lot going on and catching us off guard.
That's a great point. We see that quite often, that we are trying to match a price, and in doing so, coverage loses in that scenario. So I'm glad you brought that up. That's very true. Prices rise. It's the nature of the beast. Prices rise, and expecting insurance to remain static with the same amount of coverage, you're lucky if that happens, but generally it doesn't happen.
I think you spoke to one of the questions that came in. How are carriers regulated so they don't fold when massive claims hit? And you spoke about this, back end fund that helps, and I think the state also steps in to be able to to support some of that. Do you want to speak to that a little bit? I know that there's a lot of concerns around, if we've got insurance companies who've had to dip into their pocket to handle some of these larger claims around the state. What's the likelihood that they're going to be able to do that and cover that in the future when we're in a time of need?
Well, so the first thing I would say, someone going from an A rating to insolvent is without us knowing what's going on, would be pretty shocking.
Yeah.
They're going to go from an A to a C, and then from a C to a D, or there's going to be a process along with that. And so when they are downgraded, we know about it. it hits our ears. We get notifications. So going again from an A to an insolvent, has it happened before? I believe so, but that's extremely rare, because you've got to have a lot of capital, a lot of financial backing to have that A rating. So I don't worry too much about that. I more worry about carriers that don't pay claims. Not that they can't, is that they find loopholes not to, and those are out there too. And you can talk to Casey about about dealing with carriers who obviously are trying not to pay claims, and that's one of the things that we look for. We look for carriers that want to pay claims. Again, back to this company AmCap, who went from an A to a C. They don't scare me because they pay claims. And that's why they got downgraded. They got downgraded because they pay their claims, and that's who we look for. And when you're looking for a company to match on price, we've seen a lot out there that they're going to give you the price you want, but you better hope that you don't have a claim. And that's literally what we kind of say to each other is hope they don't have a claim, because they won't pay it.
Cole, the great question came in, and I think something as we talk about just kind of the future of what if scenarios, and one of the things that we learned are, we had down trees, sometimes in some cases centuries old oaks and just very expensive, what we call assets, because that's what they are, and landscape that costs the association, will cost an association thousands of dollars to replace, and sometimes irreplaceable, because you're talking about these massive trees that create such an important characteristic of the aesthetic quality of the association. What how do we address some of those items? There's little things, even pool equipment, some of the other things that some associations learned the hard way weren't covered, or deductibles were high enough that, hey, I couldn't replace some of these costly repairs because it didn't meet my deductible. Kind of forward planning, what are things that we can do to address some of those items?
So the first thing, especially when it comes to organic material, your landscape, your landscaper being out there protecting it before a freeze, and I understand that it's not always able to happen, but let me jump back a little bit. Depending on the carrier, depends on whether or not it gets covered. Some carriers will not cover any sort of landscaping due to freeze. Some will cover a minimal amount. They'll cover up to like $10,000, and they'll give you $100 or $200 per tree or shrub, right? They'll give you a little bit. Some will cover all of it if it's scheduled. It's truly up to the carrier and finding a carrier that will do it. Now, if you have a century-old oak tree that you spent $150,000 moving from one end to the other, and it's the focal piece of the association, that's something that needs to be carved out, and your agent needs to know about it. And so we can then go to the carrier and say, hey, look, this is an asset. We want to insure this. And if they won't do it, then maybe we need to find a carrier that will. And not saying that they will. The problem with the organics are they never know what the state of the landscape was before the freeze. And what that means is, was it irrigated properly? Was it taken care of properly? Was it about to die anyways? And the freeze hit and that just snapped it. And that's why most carriers are so leery to pay landscaping, because they don't know the state of that landscape. And all it takes is, forgetting to water it for 2 weeks. And that thing is, that tree is susceptible, or the shrub is susceptible to damage during a storm. And so that's why they're not big on paying those landscape claims. And they will give typically a little sub limit and say, hey, if something happens, here's 10 grand. We hope that helps, but we're not paying for all of your landscaping. But yeah, that's just a conversation that needs to be had with the agent, and find out from that carrier exactly how they handle landscape claims, because it's all over the board. Same thing with fencing. Wood fencing, some carriers, if there's a windstorm, will cover it, and some won't, because they'll say, well, it shouldn't have fallen down. if it was maintained properly. And so those things, again, it's just carrier to carrier, and it can get frustrating, obviously, because you're insuring it, but proving that there weren't some mitigating factors to that coming down, or to that plant dying, can be difficult.
Pools are a hot topic. I found many who insurance companies or the carriers are just denying claims about pool equipment or different factors around the pool. Talk to some of that in terms of why some of that may not be covered.
Yeah. So, and again, carrier to carrier, it's hard to speak. So I'm just going to speak in generalities, but if there's underground pipes, those can get kind of hairy sometimes with carriers, because earth movement is always excluded. And so, proving that there was some sort of earth movement that already had it damaged can be difficult. But now if there's, equipment that is scheduled, on the policy, I would think that generally that should be covered. So I would have to see what specific events it was and know what carrier it was and know why they denied it, to know exactly. But generally, if it's above ground, and it's scheduled, there generally should be coverage for it.
Got a question about basically, I guess the question could be interpreted as kind of these tweener situations where you've got repairs that need to be made, and you're trying to determine whether it's better to just go pay for it out of your reserves or file a claim. And on our last webinar that we did right after the storm, we talked about, whenever in doubt, file a claim. And I think that still holds true. And you want to talk a little bit about some of those situations. And I think you've got some board members that worry about if we file a claim on something that is nominal, it could have the adverse impact of impacting our premiums in future periods. Can you talk a little bit about how to make those calls, make those decisions? Should we go and file a claim on anything, or just go ahead and fix it if it's something that's a reasonable price and we've got the funds in the bank to do so?
Well, the first thing I would say is if there's something damaged, let your agent know and have a conversation, with them. Because one of the things is, and I believe we talked about this at the last one as well, resulting damage. So if something happens and the carrier's not notified, and then there's resulting damage from it, and they're like, hey, this was a year and a half ago, we haven't heard anything about this, it could be denied there. But talk to your agent about it. It would be the best answer, because it depends. I mean, if it's something small that, you're not going to see any resulting damage down the line, you just want to fix something, and it's below your deductible or it's right at it. So you're like, well, I don't want to make a claim because they're going to take out the deductible and then I'm only going to get, this little amount of money. Then yeah, you can do yourself. But I think talking to the agent and let the agent kind of guide you along on that to see. But the bottom line is insurance is there for a reason. It's there so you can make a claim, and it can be covered. The problems that what gets carriers bent out of shape is when they see a lot of small issues that they're covering a lot. That's when they start to say, hey, what's going on in this community? It seems like every couple of months we're covering, it's a 5,000 thing here, it's a 4,000 thing here. So then they're going to start to wonder, about the upkeep and what's going on out there. But, if there's a claim, call your agent and talk to them. Let's figure out whether or not it's something that should be turned in.
I guess then the problem is that sometimes when we make those decisions, we rely on maybe just the pool provider and they're assessing something and making their recommendation on something. But the deeper the issue grows, and as you start digging, especially when it comes to plumbing and other items, you might find that there's bigger issues and more costly issues that you didn't take into account in making that kind of surface decision. So I think that's where the value of the claim comes in, to make sure that you're putting that carrier on notice that, hey, there's something going on, something's not working, something may need to be replaced as a result of that event, and we need to explore that further.
Agreed. And if you're a vendor, who are you going to want to get paid by?
Mhm.
The association that can just write you a check immediately, or wait for insurance proceeds and have them come in and maybe fight the bill. So, just relying on your vendor may not be the best idea. Not saying that, you may not have great vendors, but it may not be the best idea to just rely on them.
There was a question about kind of the um, funding to cover for deductibles and items post-storm, whether that is, or the legalities of it. So I'll try to attempt to answer this question. So
Was it the one about, I saw one about, is there a law about how much it can increase, rates can increase?
no, not specific to that, but we can get into that as well. But specifically to um, but just paying for repairs. So that's either pulling from reserve funds in some cases. In many cases, the association doesn't have enough in reserves to be able to cover for a big loss and cover the deductible on that end. So what are the funding mechanisms for being able to take care of those issues? And traditionally, there's a couple different ways to handle it. In many cases, a special assessment. Nobody likes to utter those words, but a special assessment is necessary when the association needs to levy, dollars in order to cover for something, and that is usually powers that are vested in the board of directors to make. In some cases, the governing documents will require that the board get a vote of the membership in order to levy that special assessment. In some rare cases, the board can't even increase assessments without a vote of the membership. Those are really, really difficult to navigate. So that's where I would throw in the alternative of a funding mechanism like a line of credit, or financing something to be able to get that quick cash and access to that to take care of the issue, rather than having to go the route of chase after the money from our homeowners, right? And so throwing that out there, because there are some different ways of handling that, and I don't know how many associations have explored that line of credit option, uh, but but there are ways. I mean, the one thing we do know right now is that associations typically are pretty solid in terms of being able to finance something. So we've got banks that work with our preferred banking partner works with associations all the time, and so they know that it's a safe bet to loan an association money, because it's a regular stream of income coming into that association to cover for that note. And so that it's an option in terms of borrowing money to be able to cover those, and it's usually probably the easiest or quickest way. The line of credit, establishing that, just basically gives you the comfort in knowing that if there is ever an event, something that's a critical emergency that you need to address, that you can dive into those funds and handle that on a prearranged agreement with the association. It's not something you can just leave it out there and without touching the money. Certainly would not touch a line of credit unless you absolutely need it, but it is something that is prearranged financing should you need to access those funds. Banks do look at delinquencies for that. They'll look at a number of different factors, but typically it's a safe bet for a bank in terms of loaning an association money. And given the rather cheap cost of borrowing right now, interest rates being what they are, it's a suitable alternative. And so if you're interested in looking into that or diving deeper into that, we can certainly put you in contact with a contact at the bank and work through some of that. They'll take us through a questionnaire on some different items about the financial position of the association, and we'll work through that with the bank to secure that financing. I think we're nearing the end of our time, and I'll just kind of pause for some additional questions. But I think one of the big takeaways for me, and Cole, you can kind of close it out with some of your takeaways. I think the big thing is engage your agent. Very often, I find that we go after and we'll go chase a quote. We'll get that coverage to the point where it needs to be approved by the board, and the board really just doesn't review it. Certainly, you rely on your agent and you really rely on your management team to review it and kind of look at it. But it's also important that the board, as good stewards of the association and the business that you run, that you're familiar with it. And I would encourage you, and Cole, I hate to say this, I might take up the rest of your year on the calendar, but I don't think you mind it, is it's always better to have these conversations, especially during that renewal period, to have those conversations and engage you for kind of a question and answer on what's in that policy, rather than to find out something after the fact and that something was taken for granted in terms of what wasn't covered. And so having these conversations on the front end, playing these what if scenarios with your agent, I think those are all important things to consider. But engage your agent, that they are there for a reason, to make sure that you're making sound decisions when it comes to who you're placing your insurance with. And a resource like Cole is incredibly valuable in helping you navigate those mitigation of those future events, if you will.
Yeah, absolutely. Engage your agent, get them involved for sure. Also remember that, that the agent is only as knowledgeable as what has been downloaded to him. So we don't know everything about associations. If the information is not there, we don't know. So giving us as much information as possible is key. Knowing your loss history, again, understanding what property is out there to insure. Those are the main things. I guess really it's just knowing what needs to be insured. It is so key, because if you don't know, then I don't know, and if I don't know, then I can't insure it properly. And so know those values, know about the loss history, and engage your agent. Exactly, Mitch.
One thing I know that insurance, and it can be a very complex type of thing to dive into, especially for those who are new to their boards and really have never had to deal with this outside of personal lines, right? So one thing that I would encourage you guys to do, if you're interested, if there were some terms and things floated out here today that you were like, what does that mean? Cole and I partnered on a webinar called Demystifying Insurance about a year ago now, and it's on our Facebook page. It is something on our Facebook page. There's a videos tab, and you can go into that videos tab and find that, and find all the other webinars that we do on a regular basis here at Goodwin. But that's a great kind of a 101 on insurance, what you need to know as a board member. And I would encourage you to check that out. In fact, what I'll do is I'll send you guys a link to that webinar in our email recap to all those who registered on today's call. Also, this call was recorded, so you're welcome to forward the link to the recording that I'll be sending out to your fellow board members who weren't able to make it. And I'll also include Cole's contact information in that email. Sincerely appreciate all of you who took the time to join us on the call today. We hope that we answered all of your questions, that we gave you kind of a heads up in terms of what's going on in the industry, and some of the things to look out for when your next renewal hits. And with that, appreciate your time, Cole. Thanks for always being a valuable resource to us.
Thank you all.
And we appreciate you. Thank you all, and look forward to connecting with you should you have any questions. Have a great day.